right, so getting a fix and flip loan will absolutely scale your business. This is a complete game changer. This allows you to use other people's money, OPM, to operate your fix and flip business. In this video, I'm going to show you exactly how does a fix and flip loan work. All right, so first I'm going to show you exactly how to get a fix and flip loan, how they work, and then stick around to the very end. I'm going to break down a fix and flip loan agreement form for you that I just did. So at the very end, you're going to feel way more confident about how to get a fix and flip loan and how they absolutely work. All right, so first, a fix and flip loan. Let's talk about it. This is usually known as a hard money loan. So oftentimes, just because it's called a fix and flip loan, doesn't mean that you actually have to borrow the money to fix the house. You can just borrow the funds to actually acquire the house, and you can fix it with your own funds that are in the bank. This is my preferred method. I generally like to just use the fix and flip loan to purchase the property, to acquire the property, and then I use my own funds in my bank account or credit card or a line of credit. That way I don't have to request for draws or submit pictures or all these little steps that you have to do with the fix and flip hard money loan. Let's also talk about hard money and private money loans. Generally, a hard money loan is a little bit more expensive, a little bit higher points, like origination fees. For example, origination fees could be anywhere from 2 to 4% on a hard money loan. What does that mean? Basically, if you're borrowing $100,000 and you got 2 points or 2 origination fee points, that could be $2,000 you have to pay at closing to fund that deal. And this is basically just paid to the lender. This is for the lender lending their money. They get that as a fee. Now let's just say it's 4%. 4% on $100,000 is $4,000, and that's considered more of a hard money loan. My first hard money loan was 4 points and 12% interest. So the interest on the 12% interest, that's 12% per annum. And usually that's 12% of the loan. So if you get a $100,000 loan and you're paying 12% per annum, you're technically paying $12,000 interest only per 12 months. So if you got a 12-month loan, you're going to pay $1,000 a month to service that loan, and nothing gets paid down on the principal. That's a hard money loan. Now, generally a private money loan, we usually don't pay origination fees or points, and if we do, it's generally around 1 or 2%. So if it's 1% on $100,000, is $1,000. Not a bad deal. And usually around private money is anywhere from like 6 to 9% interest. For example, if we got a 6% loan on $100,000, that's $6,000 per year per annum. All right, usually fix and flip loans are based on 65% loan to value. So what does that mean? So if the land or the house is worth $100,000 and the lender's willing to go up to 65% loan to value, that means they're willing to loan up to $65,000 for that property. Why 65% loan to value? And generally, I like to make sure I'm in that box as well, because then I'm protected. That gives me a margin of safety or room for error or a buffer. Also, the lender doesn't want to go above 65% loan to value, because what if you default? What if you lose the property? What if you run out of money and you can't fix it or flip it? Well, if they take it back, they've only got $65,000 invested into a $100,000 property. They've only got $65,000 of their own money invested into a property that's worth $100,000. So in this situation, it's more secure. It's a more secure investment for the lender. All right, generally with a fix and flip loan, it is more based on the property and not you as the person. Now, granted, you have to have a decent credit score. Like, they don't want to see you below 620 or 640 usually is kind of the magic number. You want to be above that. And things that drive down your credit score is usually for flippers or business people is the debt to income. That part will absolutely kill you. If you're running a lot of this business of the real estate business on your personal debt, on your personal credit score, I should say, that's going to drive up your debt to your income level. For instance, if you make $100,000 a year and you spend $72,000 of it, you're at a 72% DTI, or debt to income. So that doesn't look very good to the banks or the lending institutions, and it drives down your FICO scores, tracked by TransUnion, Equifax, and I can't even think of the other one right now off the top of my head. But these are things that drive down your credit score. So if you're in business, you want to move this stuff over to your corporation or your LLC when you borrow funds, like an American American Express card is now on my business. You know, US Bank will give you a line of credit, usually up to about $40,000 if you made a profit for the last 2 years, and they'll put that in your business name. So if you can shift these things from using your personal credit to your business credit, this is really going to help your debt to income ratio. All right, I got several more points to make, so hang on with me till the very end, and I've got more for you. But before I do, smash that subscribe button. I come out with these videos 5 days a week. Go ahead, I'll give you a couple seconds. All right, so hopefully by now you've hit the subscribe button. So usually these loans are anywhere from 6 to 9%. Fix and flip loans are very short term, and the lender will not allow you to live in it. And they'll also require you to pay the insurance premiums, usually up front. So you want to account for this. The least amount they'll probably let you go is about 6 months. They want that premium paid in advance so that that property is like basically insured the whole entire time. You got contractors coming in and out of it. All right, so what I'm showing you is a screenshot recording of exactly a fix and flip loan. This is a term sheet that I just signed for a fix and flip loan on December 2nd. This is for a house that we're buying. It needs a little bit of renovation, not too much, like, you know, painting, repairing of the walls, fixing some carpet and some tile, and then we're going to put this thing back on the multiple listing service with a realtor and sell it for a profit. So this term sheet is not a commitment, and it does not basically bind the lender to lending on this. So they want me to read it carefully and make sure that I read everything before signing. Thank you for your time and interest in receiving your loan for this remodel. The loan is based on a purchase price of $362,419.27. We'll be glad to provide this loan with the following terms and conditions. Loan is not to be owner occupied, but for investment real estate purposes only. I couldn't live in this house and my wife kicked me out for a week. I'm not allowed to live there. So loan amount will be $362,419.27. For some reason they repeated that twice. I guess they really wanted me to know how much I was borrowing. Borrower will pay for closing costs and rehabs with their own funds. Now sometimes if you borrow the extra funds for the closing costs and the rehab amount, you're going to pay interest every single month on those funds. Let's just say I borrowed $400,000 and they put in escrow, let's just say $35,000 for me to do the renovation. Well, I'm paying 9.75% interest on those $30,000, even though I haven't used it yet, and they're holding it for me. So I generally don't like to borrow too much. I like to keep it very limited. So if requested, buyer must provide progress photos, paid in full invoices, receipts, and lien waivers every 2 weeks for work completed until project is completed. Lien waivers are basically something that the contractor signs saying that they've been paid this much on this date for this work, and they cannot come to the property and put any liens or encumbrances on that property. It basically protects me and the lender as well. So loan will be up to 90 days. This is a very short-term one. Remember I said it only needs some wall repairs, some paint, and some carpet, and we're putting it back on the MLS. I plan to have these renovations done in 30 days, list it in 30 days, take 30 days to sell it, and then 30 days to close it. That's 90 days. That's only 3 months. Now, if I go over that 3 months, I can potentially have to pay another point or 2 points on that $362,000. 1 point on $300,000 is an extra $3,000. So I'm saving money by getting this thing done fast. All right, so let's go a little bit more. And that I was explaining what I was just talking about, 2 to 4 points based on 3 to 6 month loan. There's no prepayment penalty, so they want you to pay it off quick. Loan will be secured by my company and myself. Property and liability insurance without a deductible larger than $1,500. Again, property must be vacant. So I can't rent the thing out and make money while I'm renovating it. So interest from closing will be on the 1st or the 15th. Loan must be closed by through an approved title company. All required documents are reviewed and approved. You'll deposit a fee of $500. So it cost me $500 for them just to look at the house, and that will go into my closing costs. So they credit me back that. And the rate will be $884 for legal fees and 9.5% interest. I said 9.75 earlier. I should have said 9.5. I paid 2 points for the origination fee, so 2 points on $300,000 is $6,000. 2, 4, 6. All right, if you're looking for someone to do a fix and flip loan or a hard money loan for you, I suggest you head on over to thelandsharkscapital.com, thelandsharkscapital.com. I have partnered with a capital company that's allowing me to do my land purchases, my fix and flip loans, and the link is below in the description. That's thelandsharkscapital.com. Click the link below. It's also on the screen. God bless. Have a great day.